Attention Los Angeles property owners, are you ready to pay massive taxes when you sell your LA real estate? We are going to run through Measure ULA, also known as the mansion tax. We're going to tell you exactly which properties it covers. We're going to run through some calculations where we show you just how much you can expect to pay in transfer taxes when you sell in Los Angeles. And stick around to the end where we run through 6 strategies to avoid paying the LA mansion tax. We're going to run from the basic to the advanced. Hey there, Christian Walsh, real estate agent with Wire Associates. We are based in Southern California, helping buyers and sellers make the best data-driven decisions in this crazy market. Measure ULA passed for LA City, and remember this only applies to LA City properties, on November 8, 2022. This ordinance, which passed with about 58% of the vote, is estimated to generate between $600 million and $1.1 billion annually in funds that will go to the Housed LA Fund. These dollars will be used to help pay for affordable housing and tenant assistance programs. The funds will be generated from the sale of real estate. So that's any piece of real estate that meets the thresholds of 5 million to 10 or 10 million and above. And that means houses, condos, it means commercial, it means retail, it means industrial, it means vacant land, it means multi-families and big rentals. Anything that meets those thresholds will fall under Measure ULA. Those of you who watch my channel know I love to jump in front of a whiteboard whenever I can, and now's a good time to run through the Measure ULA numbers and run some actual calculations. First things first, the current documentary transfer tax charges are as follows. LA City charges you $4.50 per $1,000 in the sales price. LA County charges $1.10 per 1,000, and the total is $5.60 per 1,000. That is how transfer taxes are stipulated. It's equivalent to 0.0056 of the sales price. That is what is currently due. That will remain due going forward when Measure ULA is in place. That still needs to be paid. It's added on to the 4 and the 5.5%. First off, anything less than 5 million. So the 4,99999, March 31st and before is going to be 27,999.99 in documentary transfer tax. Just that one cost is that number. After April 1st, after April Fool's Day 2023, that number is going to stay the same because we're below the threshold where it increases to 4%. Let's get into that threshold. So here's what happens. So at $5 million, we can see the documentary transfer tax before April 1st is $28,000. That will still be owed, but there's going to be more on top of it. So the new documentary transfer tax will be $228,000. So you can see that one extra dollar is one of the most expensive extra dollars that you could possibly pay. It's going to cost you an extra $200,000 if you close at a sales price of $5 million. Let's go to the limit, up to just under $10 million. You can see here that you'd be charged $55,999. Well, what's going to happen April Fool's Day? You're not going to forget that it starts because it's April Fool's Day. It is going to take a jump, and it's going to be a big jump. It's going to be $455,999.95. So an extra $400,000 is what will be due for properties that are close to 10 million. It gets interesting once we get to that $10 million mark, as if this wasn't interesting enough. Now we're at the 5.5% bracket. So a $10 million property, March 31st, 2023, it's going to be $56,000 in the documentary transfer tax. How much is that one extra dollar going to cost you? Well, the total documentary transfer tax will now be $606,000. So that one extra dollar certainly adds some additional money to this. So I'm not envisioning many sales right at 10, maybe a dollar or two under, just guessing. And this goes 10 million or higher, no upper limit to it. So let's just pick 25 million. You could imagine that a commercial property, multifamily, maybe a retail center, 25 million, it seems like a lot of money, but for a retail center, it's feasible. So what used to be $140,000, which is a pretty big number, now is a huge number. It becomes 1.515 million. That is a big documentary transfer tax. These are the numbers, these are how they play out. If you have any questions, want me to run numbers for you, of course, reach out. And don't forget that we're real estate agents based in Southern California. We are teaming up with some of the best in Los Angeles and SoCal to help with commercial and residential sales. So don't be afraid to reach out for a no pressure, no obligation, no nonsense consultation about your real estate under Measure ULA. 6 ways to avoid the LA mansion tax. First, a few important points. Number 1 is we can't give tax or legal advice, so make sure you reach out to the appropriate professional. And don't forget that things can change related to Measure ULA. The Director of Finance is written into the ordinance, is able to make changes. So number 1, the most obvious and easy way to avoid the increase in transfer taxes is to sell before April 1st, 2023. As long as your property closes March 31st, 2023 or sooner, you will pay the 0.0056 no matter what the price point is. It isn't until April Fool's Day when things increase, and that's where it could potentially get expensive for you. Another obvious way to avoid the transfer taxes would be to sell under the cutoff limits. So go ahead and sell your home for $49999 or less and you won't owe the increase. But here's where I caution you. You could always potentially be reassessed. So if you try to sell an $8 million house for $49999, you'll probably be caught. So I recommend that you not try to take advantage of this. Another spin on this would be attempting to sell the house for $4 million and the furniture for another $4 million to avoid the cutoffs. I do not recommend doing this. Again, that potentially could lead to a reassessment. And this will be something that as time goes on, I guarantee that the Director of Finance will be looking for those who are taking advantage of the system. But if there is a chance that falling just a few dollars or $100,000 below the cutoffs, if it's a legitimate value for the property, it could save you hundreds of thousands of dollars. As you could see, in going from $5 million to $49999, that was a $200,000 savings in taxes. Another way to avoid the transfer taxes is to gift the property. If you truly gift it and there's nothing received back in compensation for the property, there isn't a documentary transfer tax that's owed. This may work for families if you want to give your property to someone else. Of course, there will be income tax implications potentially, so talk to a professional about that. Another way to avoid the document transfer taxes is to die. And this is probably not one we recommend. So this is important to note that if you pass away and pass on property that exceeds these thresholds, there shouldn't be a documentary transfer tax that's owed. But there will be other ramifications. It could trigger Prop 19. Make sure you check out my Prop 19 videos. And of course, there may be income tax issues as well that you'll need to figure out. So that is another strategy, not our favorite strategy, but you can die and avoid the tax. And this is an advanced technique. This would be to sell in pieces. And I don't mean disassemble the house. There's a few different ways to take one big asset and turn it into smaller pieces. One would be tenants in common. So there's several properties out there that, particularly in Los Angeles, where they've taken a fourplex, for example, and they've gone ahead and created tenants in common ownership for the asset. Each owner gets one of the fourplexes. This would be one way to keep it below the limits that lead to higher taxes. The other way to do it would be to condo map, and this could work for residential or commercial. And it would be a longer process, but it may be worth the cost and the time to make it happen. So you take a property, maybe it has 2 or 3 units, and you turn those into condos, and then you're able to sell those individually. There's one more advanced way to do this, and I'll release in future content related to SB 9. And make sure you've checked out our SB 9 content if you haven't already. And the most advanced way to avoid the Measure ULA documentary transfer tax, and at least push it way off into the future, is a land contract sale. And don't try this at home, folks, without help. We're gonna release more content. And if you need more assistance, reach out and we'll help you get this set up. But essentially, a land contract is a form of sale where the buyer owes payments to the seller. The buyer does not get title to the property until they've fully paid off the seller, but they still get to take advantage of the property and live in it. So this is an example. You could have a seller who carries back financing for 10, 20, 30 years, And once that buyer pays that full amount, whatever amount it may be, that's when title would officially transfer to the property, and that's when the documentary transfer tax would be owed. So again, don't try that at home without assistance. Reach out if you have any questions. Leave your Measure ULA LA mansion tax questions in the comments below. We know you're gonna have some, everybody will. And of course, things are gonna change and may change quickly for Measure ULA as it's rolled out. So make sure you're subscribed to our free weekly email newsletter. Comes out on Sundays and you will be kept up to speed on Measure ULA, plus market updates and a whole lot more that you're not gonna wanna miss. And make sure you check out this next video for more about the housing market. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we want to hear from you.